Hey everybody, welcome to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstocks.com, drstoxx.com. Fresh out of the gym. Just had a great workout here in our little town. We have a downtown gym that's just for residents of the town, and it's quite a nice place to work out, nice and cool and air conditioned. And watched a little bit of my son's first day of football camp. My 6'4", 210-pound 14-year-old son, who's playing quarterback for the tackle team this year. Anyway, it's been a good day, and the market is relatively happy, with a few major exceptions. But we'll take a look at that in just a minute. Now, if you are looking to join me and a great group of traders who get together every trading day to share what we're trading, and I give you everything I'm buying and selling, entry price, stop price, target price, reasons for the trade, and on, plus my views of the market throughout the day. You can join us over on drstocks.com. Click the subscribe menu, scroll down to the live trading room. This is coming to you live from there. And if you want to add on at a discount the new live options room, you can do that as well. God bless everybody. Let's get started by looking over at some option flow. So today is the 9th of June. And we're about an hour past the investor day that Apple sets up every year, where they come out. Steve Cook gets up on the stage and he talks about new product lines, new collaborations, new this and new that, new features, new gadgets. And the tradition is that everybody sells Apple shares on that day. I don't know what is wrong with their presentation skills, or what's wrong with the company as a whole. But they always seem to turn off market sentiment, or turn it bearish on these investor days, and today was no exception. So you can see this is the Apple call flow. I've got a filter on here that shows me both calls and puts, only at or above the ask, so nobody's selling calls. These are not bearish positions. They're all bullish, or bearish if it's a put, and only a trade size of $100,000 or more. And you can see right off the bell, here's the 9:30, right off the bell all the way to about 10:15, we had one guy who's coming in at the 200 strike, going out 2 weeks, and he was buying 1.25 million size blocks, one after the other. Here's one, here's one, here's one, here's one, here's one, here's one, here's one. He loaded up. Now he's only got 2 weeks, and he was at the 200 strike, and you can see the price right now. It's at 201.79. And he paid about $1.40, $1.50 for those. So is that right? Oh, you know what? Oh, I thought he only had 2 weeks. No, he's going out to 2026. These are leaps going out to next year. He's got a whole year, so he's doing okay. I thought he was doing like a real big, short-term trade on the investor day, but no, he just, for whatever reason, wanted to get in early today. So there's that going on. That was a disappointment. And then we had this guy come in at the 205 strike, and this was only day trade, right? Going out to this Friday. So today's Monday, 6/13 is Friday, and he was paying $3.30 for those. You got to get up to well over 208 for him to even break even, and we're down here at 201. So not a good look for him. Just to show you, too, that guys that have deep pockets, that trade every day, they might even trade for a living, they might manage hedge funds or mutual funds, they still make bad trades. They still do. Now, Apple can turn around, right, and just go right up to 215 by the end of the week. We don't know, but this guy is definitely underwater right now. And we had a series of calls and puts throughout the rest of the day in response to the investor day, and still not really seeing much that's that bullish there. But I want to show you something that is bullish. People are loading up on Uber calls with a little bit of time, right? July, November, January of next year, right? So these all have some time. Current price is 87.57. The strikes here mostly above 90. So some good optimism going on here in Uber. We are long the Uber shares in the live trading room. And so this is good for us to see. The last one I wanted to look at is NVIDIA, because I haven't looked at it today. We do have NVIDIA long shares in our wealth building portfolio in the live trading room, and we're long NVIDIA shares in the, NVDL, which is the leveraged version of the ETF calls in the live options room. So I want to see NVIDIA do well, and it's been doing well. I'll show you the chart in just a minute, and you can see that, look at this. Calls, 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 as far as the eye can see. Now, there are a few puts in there, but you can see it's like 10 to 1, 8 to 1 calls over puts. And if we were to look at the size, right, huge. In fact, let's do this. Let's scroll down, not that one. Let's scroll down to just look at those over 500,000. All calls, all calls. There's one little put. All calls all the way down the road. NVIDIA is the number one in bullish flow, 62 million. That's a big number. $62 million in bullish option positions just today going into NVIDIA. Is NVIDIA the stock to own? Yes. Is it still the number one CPU and AI processor in the space? Yes. Is anyone else likely to capture, take market share away from NVIDIA? Probably not. Now, AMD, they have an investor day on this Friday. Rumor is, in my pro trading group, the rumor is that they're coming out with a new CPU that's 45% faster than the one that is currently their best seller. If that is the case, that could take some market share away from NVIDIA because it's going to be about 1/8 of the cost. NVIDIA, their GPUs, CPUs, whatever they're called, are super expensive, way, way up there. And the AMDs are able to keep, for whatever reason, I don't know why, they're able to keep the prices really low. But nevertheless, NVIDIA is the stock to own. It's probably the stock to own for the next 10 years as far as I'm concerned, the main tech stock. Sell your Apple and buy NVIDIA. That's my tip of the day. Okay, let's look at some charts. So we've got index charts over here. Let's take a look at the S&P 500, and you're going to see a very similar pattern forming on major indexes, most of your leading mag stocks, tech stocks, a lot of software stocks, and a handful of other stocks in various industries too. You're going to see either a run off of the April tariff crash lows and then printing a nice looking bull flag, or a cup and handle, right? The cup is coming down to the bottom of the tariff crash and the bull flag is the handle itself. Or you're going to see, equally as bullish, an inverted head and shoulders pattern, and you're going to see these all over the place, They're probably clearest in the indexes themselves, and here is the inverted head and shoulders for the S&P, and it is very nicely formed. Now, let me explain this pattern a little bit because there's a very interesting set of psychological principles that lie behind it. So the first of all, you have a neckline that typically is horizontal. When it's tilted in a bearish direction, that is to say downhill, that's not good. Right? You don't really want to buy an inverted head and shoulders that has a bearishly tilted neckline. You want it to be horizontal. That's usually the common one. Typically, it's a line that is at a bunch of former support lows and are now resistance highs. Or you want to see it, and this sometimes is even more bullish, you want to see it leaning in an upward direction, an uphill direction, and that's what this one is doing. And you don't get that kind of a neckline in an uphill direction unless the market itself is very bullish. So that's already a good sign. You also want to see the right shoulder well above the left shoulder. That's certainly true. And the deeper the head relative to the shoulders, especially the right shoulder, the better. Now, here's the psychology behind it. So typically the neckline is a line of support. Support gets broken. People start selling. That creates the left shoulder. It reaches a point of equilibrium. It could be a moving average. It could be a valuation level. It could be something on the weekly chart that we don't know about. It hits that level of equilibrium and bounces nicely back, typically on lower volume than the selling that was taking place on the left side, hits that neckline again, and that's when all hell breaks loose, right? This is it prints a lower high, which is a bearish thing. Sometimes these happen right at a level of resistance, and then it just gets slammed all the way down. Now, this happened to be coinciding with the tariff crash, right? Liberation Day, Trump's Liberation Day, which wasn't well received by the market. Heavy volume, selling pressure all the way down. The deeper the head, the bigger the breakout. And we had a very deep head right here. Now it hits again, a point of equilibrium. It's way oversold. It's maybe a moving average on the weekly chart or a former support low on the monthly chart. Anything can happen to cause this to stop selling off. Typically, you get also something in the macro environment as well. Then you get the rally back up, and you generally want to see more volume coming in on the upside than you saw selling pressure on the downside. But that doesn't usually happen. If you see that, that's really good. But that's not the case here. You had more selling volume on the way down than you had on the way up, and that's okay. We can live with that. Here's what you want to see. You want to see a nice, quiet, shallow right shoulder. This is like it hits the neckline. Is it going to roll over again? Well, people start taking their profits, and people, maybe some new shorts come back into the market, and it's going to go right back down again. Boy, there were so many bears out when the market was rallying back up. Like this little 2-bar red reversal right here, right at the midline of the LRC. I know I started to get bearish then. We put on some hedges that didn't do very well. We got stopped out of those because everybody and their mother was thinking the tariff news hadn't been priced in. We had no deals in sight. It was still 125% on China. And then it was right back up again. We had a couple of weekends, where Trump comes out and says, I'm going to delay tariffs. Yeah, that was good. I'm going to reduce tariffs. Also good. We've got China coming to the table for negotiations. Really good. So it just kept a bid under the market. We've got this nice little right shoulder here. It's shallow. Not really seeing what we want to see in the volume balance, but we'll take the price action, and we're right up against the neckline again, and that's why the inverted head and shoulders is so powerful as a bottoming pattern and as a place to launch a new leg higher, which is exactly what I think we're going to start to do this week, because you've got all the fears already been priced in. You've got a little scary reversal that failed. So you're going to get a lot of bears that just kind of give up. They throw the white flag in, and now they're probably going to go long. And you've got a lot of folks on the sidelines that got scared out down here. They want to jump back in again, seeing all these great gains, and they're going to do it over here in the right shoulder. So we've got PPI, CPI coming up this week. Those could be, they will be catalysts. I'm not so sure that they're going to be horrible, probably in line. Let me just take a quick look at what the market is expecting. So we scroll down here on FinViz, we click on the economic calendar, and we go to Wednesday. CPI is expected to come in. Well, I'm sorry, these are only the monthly readings. We really need to see the big headline number, which isn't included here. I don't know why. But it does look like last month, the PPI shot way lower, down to negative 0.5. And the CPI last month was in line, 0.2. So we are expecting PPI, at least, the production number, to come in a little bit hotter than it was last month. But these numbers look exactly like they did the month before and the month before and the month before. So I think we'll be okay in terms of expectations. And CPI might even come in a little bit cool because, well, actually probably won't, because people are buying bigger ticket items now in worry and in fear of the tariffs being put on items later. So they're trying to buy things cheaper now, which is one of those things, when the worry is that the Fed is going to raise rates, everybody starts buying quickly, which increases prices, which triggers more inflation that the Fed is trying to get rid of with the threat of higher rates. So it's one of those, the Fed really can't win when it comes to battling inflation, at least in the short term. Okay, let's get back to charts. So very bullish chart here for the S&P. And then the NASDAQ is going to look very similar. It's not quite the same. Let me get rid of some of these lines here. It's not the same inverted head and shoulders. There is a neckline right there, but that is slanting a little too far uphill, right? The right shoulder is a little too far above the left shoulder. So that's not really the pattern. I think what the pattern here is, if I can fudge a little bit, is that it's already a broken inverted head and shoulders. Here's your left shoulder. Here's your deep head. And here's a little baby right shoulder, exactly what you want to see. You want to see lots of good volume coming in on the upside of the head. You want to see a little tight, quiet coil under the neckline in the right shoulder. And that led to the massive, massive breakout. That was, I think, the China weekend. And then this is the Trump delay weekend. And it's all been good, all been upside. And we're seeing, kind of low fear numbers from the VIX. We're seeing not really complacency, but we're certainly seeing nice, quiet, higher trends that are the kind that typically last for quite some time. And we're in the early stages of this. We are really in the early stages. Now, the NASDAQ highs are right up here. So there's just not a whole lot more room to the upside before we test those. And test them we will. I'm not so sure we'll test them like right away. We'll probably do a little bit of coil in this area, but I do think that by the time we get to the end of July, we will have tested the all-time highs for the NASDAQ, and it should be a decent summer, a blue sky breakout summer, the kind of summer where you're getting new all-time highs every few days, a little bit of pullbacks, little bitty pullbacks, and mostly a buy and hold kind of environment. All of that, of course, is moot if we get a worsening of the tariffs, if China withdraws, if we get World War III breaking out, all kinds of things can happen to devastate the economy, or at least instill some bigger fear than we have right now. But right now, everything's moving in the right direction. Tariffs have been lowered. Negotiations are happening. There are some deals either having been cut or will be cut soon. It all looks pretty good. Really good, actually. And the charts are saying the same thing. The charts are bullish, bullish, bullish. Now, here's the thing that is so cool for this Russell 2000, the small cap index. Small caps typically don't do very well in a high inflation environment. The Fed raises rates and then makes money supply pretty dry up pretty quickly. And these small companies, their debt to income ratio goes up and their credit scores go down. And so it just becomes really hard in the kind of environment we've been in for the last 3 or 4 years for small cap companies to do well. And that's why they're 2 or 3 years below their all-time highs. Russell's not going to get back up there anytime real soon, but this is a very promising development technically, and it's just so perfectly developed. You've got a deep left shoulder, right? You've got a very deep head, and you've got a nice, tight, shallow, 2-3 week long right shoulder. And if you look at volume balance, right, you've got heavy volume on the downside, and then you've got volume does lighten up here on the upside, but at least it's mostly bullish. And no, it just looks really, really good. We broke out on Friday. We're confirming today's a follow-through day. If it holds here, we're confirming that breakout, and it is a green light as far as I'm concerned for the small cap index. We've been out of any trade in the small caps for a while. I think it's time to get back in. We've got a lot of trades on at the moment in both the rooms. We started buying the last couple of weeks, and the market has just been so good that we've hardly gotten stopped out of anything. So you just keep rolling up the stops, and it's not a rip-roaring, face-ripper kind of get-rich-quick kind of market, but it is a good, solid, uptrending, bullish market, and I just don't see this slowing down anytime real soon. I did mention in the room this morning that gold was looking pretty good. You know what? I'm going to revise that a little bit. Not that the chart doesn't look too bad, but if the Fed is taking its foot off the brake, that's for sure. They're kind of waiting to see how the tariffs play out and how any impact on the job market from immigration policies. So they got their foot off the brake, but they're not putting their foot on the gas pedal anytime real soon. They've been hinting that maybe not even cutting this year, one or two cuts. I think that we'll get two. Um, but they're just in a wait and see mode, and that kind of puts gold on pause as well. So gold will do well once the Fed starts cutting rates. But and gold has played a safe haven during all of this uncertainty. Um, but I don't know. This to me is looking more and more like a topping formation rather than what I thought it was, some consolidation. It could still be consolidation. It is a tightening wedge here. Things are getting tight. The trend is up. The 34 EMA bands are up. The LRC is up. I don't have any moving averages on here other than the 34, but they're all pointing higher, and we're up not too far from all-time highs. We had a little 2-bar reversal off of the testing of the resistance line and a reversal back up today, although it is a 2-bar down. So it's a lower high than Friday and a lower low than Friday, and those kinds of bars tend to roll back over the next day. So we're looking for a better reversal bar than this, but we'll have to see where it goes in the next couple of days. But I think I'm going to stay out of gold for now. Now we did go long Bitcoin, and it's the right move. It's a great looking chart, and your all-time highs were printed a couple of weeks ago. Nice looking pullback. It's a little bit sharp, but it is an A, B, C pullback, and it didn't get any further than the mid band of the 34 EMAs. That's good. That's bullish. You don't want to see it get all the way down to the third band. Tends to be, if you get all the way down there, it tends to be a little bit of a quick bounce and then roll back over for another leg lower. Don't have that at all. Nice looking inside day bar on Friday that is bullish. That is to say, the low is higher than the low of the previous day. The high is lower than the high of the previous day inside day bar, and it's green. And the volume, it's kind of hard to tell, but it was slightly above average yesterday, and we're above average so far today on the big gap and go. So this looks great. Your target is the good question where the target is. I'm not exactly sure, but if we go off the highs of the previous intraday pivots, that would be an immediate target, right? All-time highs, immediate target. I think it's going to get higher than that. I think this is going to go to 120 probably before we get too much more downside. Okay. So those are the indexes. That's gold. That's Bitcoin. Let's take a look at some of the stocks on my greens list. I think maybe good to go there. So HRTG, I was recommending this in the live trading room. It came up on my momentum scan, and we've been in it for a couple of weeks. So we're in it down here, and it was up around $1.50 or so above our entry. I don't know what happened today. It was just a big flush out day, and I don't know why. I think there is some news because you've had that little lightning bolt thing there indicates that there is some news of some kind out on the company. Maybe it's a downgrade. Who knows? But it's a no-go zone for today. It's a hold for sure. In our momentum letter, we were holding until Friday at least. Okay, some other stocks we're interested in. Sophie, I think, is here's your Head and Shoulders. Right, you're going to see this all over the place. So Sophie is a credit asset, online banky kind of thing, and again, we're seeing this pattern all over the place, not just in tech. And this is a beautiful breaking out. There's some good things going on in the company fundamentally as well. And I think personally that it is undervalued and should have a really good rest of the year. Okay, we're no longer in XNCR. I'm going to take that off. We're no longer in Airbnb. Datadog should do well because it has positioned itself in the defense space, especially aerospace. And Trump, a couple of weeks ago, was out saying he wanted to ramp up the military budget, particularly for aerospace defense. Now, I have another play that I like actually better than Datadog. But if you're looking for a pure software play that will be plugging in or could potentially get some really big government contracts, it would be Datadog. And here's again your inverted Head and Shoulders pattern. broke out last week, holding pretty nicely up in the highs. It is a reversal off the low, so you're going to see moving averages in the linear channel falling as a downtrend, but I think the downtrend is behind it. I think it's all upside from here. Keep an eye on LQDT. It's not doing very well today, but it is. It's got an investor day coming out on Wednesday, I think, this week sometime, and it is a deeply undervalued company. We got in down in this little pocket down here, so we do have some upside already. HIMS, a little bit of a disappointment today because it had a nice looking reversal on Friday last week and no follow through today. It's a gap and crap. So we'll see. We'll keep an eye on HIMS next couple of days. It couldn't get up to the previous IPO highs, printing a lower high, but the rest of the market was doing that also, to be fair. But the good thing about, well, I wouldn't say it's actually a good thing. It did come down in April. I was going to say it's doesn't seem to be affected by the tariffs too much, but it did sell off quite a bit. It's just that it's not a 52-week low, and it's well above some of these other lows from last year. So we'll call it a modest pullback on the tariffs. Nice strong rally off of that level. Nice pullback into the 34 bands. It didn't even get to the green line. It only hit the blue line. Big reversal bar on Friday on good volume. Just not following through today. So let's keep an eye on that. I like the quantum computing space. I thought RGTI had a good a reversal bar on Friday. It kind of petered out, and it's a gap and crap so far today. So it's not ready to go, but we'll keep an eye on it. We got long this one. This is a very well-ranked biotech firm, and it shot way up on earnings. That's the word I'm looking for. But they also came out and announced an FDA approval for their big blockbuster drug that is not just approved for kidney cancer, but now is also approved for something else, another kind of cancer. And of course, that's always a huge thing for a blockbuster drug. If you know there's a term for that in the biotech world that I'm forgetting. But when an approved drug gets new approval for a different application, that's very good because it opens up a whole new market for that drug. And they've got a really good pipeline, and it deserves. If you're going to hang on to a biotech firm for a few months, this would be a good one to do that. So we are long some. What is this company again? Norwegian. I knew it was a cruiser, but a Norwegian cruise line. We're long some calls in the other room. It's doing pretty well. It looks like a little soft today, so we have to be careful with this one because we have nice profit, but it is reversing and rolling lower. I really thought today Labu was going to do well. It did gap up. That was not the best open for Labu because it likes to do gap and crap. And it is up in the blue zone. But if you're looking for a potential bottom in a major sector that has been very much of a lagging sector. So we are in XBI as a longer term portfolio trade, and it's doing a lot better, but in 2024, it was one of the worst sectors, and year to date, not so good. Yeah, down about 5 or 6% year to date. So a lot of catch up to do with the healthcare sector. You know, a lot of that is the MAHA uncertainty, I guess, MAHA, Make America Healthy Again uncertainty, how much that will affect biotechs. But I suspect by now, a lot of that's already been kind of priced in, or a lot of it probably won't even happen. And yeah, and there's just so much value down here in these biotechs. So I like it longer term. PSTG, I want to pump this one because I really think here's your Head and Shoulders, perfectly formed. This is a storage play. It used to be a big Momo stock. It is a big mover, so be careful with it. But the valuations here, the analyst support, 5-star analysts that really like this stock. There's a lot of those, and it's got some good stuff going on. So keep an eye on Pure Storage. Pure Storage. Let's see. Jets showing a inverted head and shoulders breakout today. Little Israeli pharmaceutical Teva looks pretty good. Inverted head and shoulders, cup and handle. We're long Amazon calls in the other room, and it's off to the races today. We're long Baba calls in the other room, and it's been pretty sluggish, but it's nicely above our entry and starting to catch some speed. So all the Chinese plays. Here's the pattern. Here's the pattern that we're expecting to give to the upside. All the Chinese plays have been held back on the uncertainty on the tariffs. But Baba's an interesting play because it's not just retail, it's not just selling stuff, it's not the Amazon of China anymore. It has its hands in a lot of big stuff, AI, cloud, and internet platforms, and all kinds of stuff. So it's kind of like, what did I call it the other day? If Amazon and Google uh, and FedEx, because they have a logistics arm. If Amazon, Google, and FedEx had a baby, of course, you don't want to go there, but it would be Baba, right? Alibaba, and the valuations here are really compelling, and I like it as a long-term hold. It just is not going to be a face ripper until we get a deal. We showed you Uber. The chart looks great. It is a breakout of a nice looking pullback, ABC pullback to the bands. It did go a little far, but it's not a sharp angle, and it has already broken out and confirmed. So that's good. LNTH, I'm long this one. It's not an official trade, but we bought it down here on news of an investor day, and there was some rumors in my pro trading group that it's going to do really well. It's going to announce something that the market will like, and it has gone up every single day. The investor day is sometime this week also. I'm just going to hang on to my shares. It's not a big trade, but I like what it's doing, and of course it has a great big gap up here, and I don't even know what I'm forgetting what sector that thing is in. PLTR. So big red bar day on Thursday, inside day bar bullish on Friday on good volume and some follow through today. I think you could buy PLTR. You really could. Yep. There is, and it's one of those stocks. For whatever reason, this is interesting. There's like two groups of stocks. There's a lot of stocks like LNTH down near 52-week lows, but man, the analysts love it. Absolutely strong buy all around, and some big named analysts, big firms are behind it. PLTR way up near 52-week highs, and the analysts hate it. Absolutely hate it. All their price targets are lower. Nobody's on a buy. Everybody's on a hold. I don't get it. I really don't get it because I'm hearing that PLTR is like a must-own stock. So take it for what it's worth. Now, sometimes, if all those analysts are negative and the stock starts breaking out to new highs, they're going to have to change their tune, and that could be very bullish for the stock, right? They're going to all do upgrades and raise their price targets because they have to. It's the guys who, were in Tesla and they were so bearish and they're lowering their price targets and they don't care about anything. Those are the guys that the perma bears. And there are a lot of Tesla perma bears that are going to get in trouble with their firms. ARM, I might get us into ARM today because I just really like this bullish. I'm not even sure it's an inverted head and shoulders, but here's your cup, here's your handle, and it's just really, really good. A lot of upside, right? Your upside target is up here around 180, and it's at 140 right now, so that's a nice move. All right, that's all I've got. Let me go back to the room, and let's take a quick look at AMD. So that was one of the stocks I was researching over the weekend, and we are long AMD in the live trading room. And I have a position in my family fund. I added to that recently, so I really like AMD. So rumor in my pro trading group, and I said this before we started rolling the cameras. A rumor in the pro trading group is that this Friday AMD has an investor day. That's true, and they're announcing a new CPU, GPU, GPS. some kind of a technical thingy, and it is 45% faster than their current best-selling CPU, and has twice the memory, and is like 1/8 of the price of NVIDIA's best processor. So if that's true, you're going to see AMD skyrocket. Now, it's just a rumor, and rumors sometimes have a way of not coming true. So we'll see. They might just hint at it. They might say it's in development. They're experimenting. Blah blah blah. But just the rumor of it is worth, in my mind, hanging on to AMD for a while. And valuations are they're still a little bit rich, but if you look at forward valuations, so AMD has the highest CAGR rating of all the major semiconductor players, right? Intel, AMD, Qualcomm, NVIDIA. It has the highest CAGR, which is the cumulative annual growth rate. And when you look at that, that's kind of like the projected amount that the company is expected to grow over the next year, 3 years, 5 years. It has the highest rating in that space. That's worth a lot, in my opinion. There are some other stats I came across, and I'm forgetting them all now. They're all in my notes, and I don't have them in my head just yet. But here's your inverted head and shoulders: left shoulder, head, right shoulder, breaking out today on a nice gap and go. Heavy volume coming in as well. I think the rumors getting around. I think people are starting to realize AMD is where you want to be. So I like AMD, and it's still a very good buy here. It's just early days yet. It's all-time high. It's all-time high on an intraday basis is way up here, 228. And if it got back up there, that would be almost a double, right? Almost 100% return. So let's hang on to our AMD shares for a while. All right, I'm going to take a look. I know you typed in a few ticker symbols. I won't get to all of these, but let's take a look. BSX, I'll just do one per person. Okay, so this one is it's a biotech, but it's not. It's more of a drug making company than anything kind of experimental. Solid earnings, good valuations. It's on the IBD leaderboard, but I have to say they just cut it last week because of this pullback here. They were seeing the extra volume coming in and seeing it get slammed off of intraday highs. So IBD it's a no-go zone for IBD, and it's following through to the downside today when most of the market is up. All of that said, it's probably a good hold. I wouldn't buy it here until you start to see a reversal back to the upside. And the best way to gauge that is don't buy it until it gets above that black line. And it's not there, of course, yet. So I would say this is going to come back just on the company itself. But for whatever reason, the market's not seeing what it likes right now. So it's a hold, not a buy. Wait until it cracks that black line to either buy it or add. Qualcomm is good. All is good with Qualcomm. And we're long Qualcomm in the live trading room. Here is your inverted head and shoulders, but this is that downhill slanting neckline, which is not so good. So maybe that's not exactly it. Here's a very well established, former support low, right around that same level. And here's your cup and handle. Big cup, little handle, breakout today. And today's move just looks fantastic. Absolutely fantastic. So Qualcomm, you could buy it. You could hold it if you're already long, which we are. And I think we're in with a full position, if I'm not mistaken. So because it's already up to 156, you'd keep your stop just below the neckline rather than below the right shoulder, which is where you would normally put it if you're buying it here in the right shoulder. Just below the neckline, trail it up as it goes higher, and your target is this area, right? I would say 176. 176 is your first term target, and then if it breaks out, which I assume would be not all time. It could be way up there, 228. It might get back to 228. I'm not exactly sure what's going on in the company specifically, but that looks really good today. Market likes it. That's all we really need to know. AVGO. Okay, so down on earnings, never a good thing, but the earnings were very good. It's just that the expectations were so high, and it had already run so far off the lows, right? From 140 to 260 in just a month. It had overheated. AVGO had overheated. Now, you want to be long AVGO, and you want to put this in your family fund and don't sell it. Because AVGO, it's been around for a long time. We used to trade it back in the 90s, and it's always been a good trading stock. But right now, it's cranking on all cylinders. It's got a lot of good. It's got federal contracts. It's got relationships with all the major tech companies, and I suspect that you'll see AVGO really start to take some market share away from some of the bigger players. Um, but it's not a buy right now. You're going to have to let this play out, right? So anytime you have a gap down on earnings that doesn't close immediately, you want to wait for a little while. You're going to see some resistance right in here. And in fact, I have a trading system that would have flashed a sell signal today. When you gap down after a new 52-week high, you gap down on whatever for whatever reason, and then you take out the lows of the gap down day the next day or within a couple of days. That's a sell signal, a short signal. So there is resistance, or sorry, support down here at 230. The top of the bands is probably where it's going to get to before it turns around again. So you don't want to be long right now. I would just give it a rest, but keep an eye on this one. You want to get back in. If you took profits up here, good for you. If you did not hold over earnings, good for you, because if you're a short-term trader, you don't generally want to hold over earnings. And now you're just going to have to wait for a good entry signal. And we're not there yet and probably won't be there for a little while. UCO. So this is oil, of course, 2x bullish version of oil. I keep saying I'm out of energy. I'm not doing energy anymore because I keep getting stopped out of energy trades and it stopped out of oil trades. But with that said, I mean, this is a massive slam. That's on the tariffs. The fear, of course, on tariffs was that the whole global economy was going to shut down, just like COVID. And there would, nobody's going to travel anywhere. No one's going to buy anything. No one's going to ship anything. And the supply chains are going to all get clogged up, and the ships are going to be off the coast of Long Beach, and it's just going to be a mess, right? Everything's going to come to a standstill. Well, guess what? None of that happened. Absolutely none of that happened. So oil has been pricing that in, and here's some really good stuff. Actually, I like this setup. This is a bullish setup. Here's your big COVID. Here's your big tariff fear slam. Here's your double bottom. Very important. Double bottom, bullish, double bottom. Do we have bullish? Yeah, we do. We've got, I'll tell you what. Let's see if we register with the divergence. Yeah. It's only showing RSI, but I would count this, well, that is RSI. I would count this higher low here in MACD to be a bullish divergence as well. And then we have a higher low, right? A higher low right there, and a breakout above the most recent pivot high. That is just bullish, bullish, bullish. Okay. So I told you I'm not doing oil and energy, but if I were, I would be a buyer right here. I would put my stop, give it below a couple of days of lows, even if down here at 20.8 would be a pretty conservative place to put it. And your first target's going to be up here filling that gap, I would say about 27, and it's at 22.66. So that's a nice swing trade. And if you want to hold longer term, I think it'll do well because the economy should start to really kick into high gear very soon. We get these tariff deals done. We get supply chains opening up again, and you'll see oil get back on track. And it could be up here in 30 by the end of the summer, even. Maybe not. Maybe by the end of the year. All right, I'll do one more. GEV, and this was on and has been on my watch list for a while. Kind of waiting for it to do a pullback. Hasn't done it yet, but it is starting to. So this is a, correct me if I'm wrong, but this is a play on data storage, data centers, the energy that they use, the infrastructure that they need. There are several good-looking plays in that space. I was looking at a couple of them over the weekend. There's a ticker symbol ACM, I think is one of them, and EME is another one, and these are companies that they don't build out data centers, but they service data centers in various ways. You know, they do the HVAC, the cooling systems, the cleaning systems for data centers. They build out the communications infrastructure in data centers, so they're connected, and they're doing well. They're up near 52-week highs. GEV is doing well. It's up at 52-week highs. Strong fundamentals in this one. So I would, you know, maybe it's not going to do a pullback. Maybe this sector is just so strong that every little dip is going to get bought. Now, it's not having a good day today, and it's been under some modest selling pressure for the last 4 or 5 days. So you kind of want to let that play out. Let's go to the 1 hour chart and see what we can figure out there. Because when in doubt on the daily chart, in other words, when you're not finding a good entry on the daily chart, scroll down. 1 hour, 2 hour charts are the ones I typically use, and see what's going on. Okay, so this is not ready to go yet. I can see right away. We're breaking the bottom of the LRC. It is an uptrending one. We're down in the pink zone, but it's not showing me any signs yet of people buying it. The MACD has rolled over down below the 0 line, not so good. RSI flashed a sell signal. It's down near multi-week lows, not so good. You're going to have to wait for this to kind of cool off on the downside. The good news is that it looks like there is in this area some good support where it did bounce weekly, and it just hasn't been able to get back on track. And the prior rally before that was very good. The rally before that was very good. It will get back on track. It's just that it's just not ready today. There's your resistance line. If you want to play it safe, you would wait until that cracks to the upside, but I would just wait until you get a good green bar in the pink zone with decent volume. That would be, for me, a buy signal. Alternatively, you could wait until the MACD flashes a green bar in the histogram, and you want to see the RSI come down below 40. It's not doing that just yet. Let me show you what that looks like on this chart over here. So GEV, I need to wrap this up. I really do. I always get too winded. Let's look at the 2 hour chart, see if there's anything different here. There's not yet, but the 40 is the kind of the line that signals oversold. And when you get a dip below 40, let's go back to the hourly. When you get a dip below 40 on the RSI, we're almost there, and you get a green histogram on the MACD from below the 0 line, and it is below the 0 line. It just doesn't have the green bar yet. That combine those two together, you get a buy signal. So let me know. Let me know. Shout in the room if that happens. Guys, I'm going to have to let you go. God bless everybody. I'll record this video. Produce it and then get a link to you all, and we'll be back trading together in about 15 minutes. God bless everybody. See you soon. Bye for now.